programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for your bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever scintillating, at least we tend to think so, Options Insider Radio Network. If I sound a little bit different, it's because I'm not coming at you from our usual Chicago studio. I'm actually beaming in from sunny Florida. I'm down here at the Futures Industry Association Boca Conference here. I haven't been down here in about 4 years, so kind of getting the lay of the land again down here, catching up with a lot of our contributors on the network and a lot of the people that we bring on, trying to find more content for you folks all the time. So we sound a little bit different. That's why hopefully everything holds up throughout the duration of the show. Of course, if you want even more show than just this, you want to go above and beyond, you want to get live access, you can heckle all of these guys during the show. Of course, ask questions on all of our pro Q&A sessions, as well as enjoy options oddities, great giveaways, a whole bunch more. TheOptionsInsider.com/pro is the place to go to learn more. Let's learn who's joining us on the show today. First, let's go out to the dark, the stormy, the, dare I say it, terrifying shores of Maine. Who could possibly live there? Well, I only know of one person, and it is the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. How can you possibly live in such a terrifying place?
Well, I guess I did spend my formative years on trading floors, so it wasn't too much of a stretch, to be quite honest.
Yes, they were pretty terrifying. I was talking to your CEO. Henry will be on in a minute for the CBOE CEO. He said, want me to come see this week, wanted me to come see the new floor. I said, the new floor, it looks nice, but looks far too pleasant. It looks far too like a nice place you'd actually want to spend time. That's not a trading floor in my mind. A trading floor is dark, dingy, oppressive, a place you go because you have no choice, because that's where fortune and adventure lies. But yes, it is interesting to see the modern incarnation of a trading floor. Speaking of a modern incarnation, he's a modern incarnation of a very major general and also quite the gentleman over there at stcharleswealth.com, Mr. Uncle Mike TOSAW. Uncle Mike, welcome back to the show, sir.
Always happy to be here. Thank you for the kind words.
I have him once or twice. I'm in sunny Florida. It is not, even though I'm deep in the bowels in the conference room right now. I was going to try to do it outside. Didn't seem like the acoustics were going to be my friend, so we're going to try it inside instead. And then also joining us, it's Thursday. It's time for his weekly hit with the FLOWMASTER himself, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, welcome back to the show, sir.
Thank you, Mark. I'm always happy to be here. Although I want to hear a little bit more Pirates of Penzance, if that's what you
That's all you get for now. You got to join the pro to get the full. You want to hear me sing? You got to come in on the pro side. That might scare some people away. We might lose some pro members now, but hey, I'm just adding that free bonus. You join the pro, you get to hear me sing, as we also get to hear us all weigh in on the trading block.
Down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what the heck is trading out there? And it's been a tumultuous week. I leave the studio, I leave Chicago for a couple of days, and these guys go ahead and they break the market. Once again, in my absence, things are selling off, banks are failing, madness, volatility. Coming into the start of the show today, things seem to have quieted a little bit. The latest rumors scurrying around Credit Suisse that it was going to be the next dodo, the next to go the way of the dodo, I should say, out there. Seems like maybe those were a little bit premature. Market rallying off that news today. As we're kicking off the show, S&P up a full 1.7%, closing a little bit north, actually, of 39.5 again. So gone, at least for now, of the days of the 3,800 handle. We shall see. We could be back down there before the end of the day, given these markets. NASDAQ really stealing the march on everybody today, up 2.25%, or 256 handles out there. The Dow up a little over about 1.1%. That means all of this concern being alleviated, at least for now, means our Vol friends taking a bit of a break. When we kicked off the show, VIX at about a little bit shy of 24, about a 23.85, down a little over 3 handles, about 3.15 handles from where we were this time last week. VVIX. Still frothy, 110, up about 2 points from where it was this time, not even last week on Monday's show. Seems like a week ago now. Seems like this conference has been going on forever. VXX, 52, down 4 handles from this time on Monday. UVXY, 585, down about 3/4 of a point from last show. SVIX, our inverse friend, getting a nice little lift today, 14 3/4, up about a point. UVIX, 2210, down about a little over 4 points. And VolQ, 2420, down a little over 3 points from where it was this time last week. So a lot to unpack. Let's go around the horn. Let's go the opposite of the way we started. Let's go out to the FLOWMASTER, sir, first. Easy for me to say. Mr. FLOWMASTER, I saw a lot of your CBOE compatriots this week. I was giving them a hard time about some zero-day fun. Your CEO, he's a big fan of the Gamma Bombs T-shirt. He wants one when we eventually make them. So I'll have to send Ed one. But, sir, what's lighting up your tape out there today?
Well, it's kind of become very interesting out there. We basically have a surprise banking crisis that was kind of, I think for a lot of traders, just showed up out of the blue. I think a lot of other people would say they've been watching this, but the end of last week got pretty hairy, with the news of Silicon Valley Bank basically becoming insolvent. And kind of, all of a sudden you get a lot of people panicking about contagion and, this whole kind of news frenzy, right? So, I mean, what we've seen, for the last few days is, much more volatile markets and a really strong, focus on the financials, especially these regional banks, of course, but also energy names. So, you basically, we've been talking about this kind of most of the year, right? You've got this.
He did it again. He died right in the middle of his statement. Henry, are you there, sir? Right when he gets to the interesting part, we always lose Mr. FLOWMASTER. All right, we'll drop off. We'll go out to the land of the Rock Lobster right now. We'll see if we can get the FLOWMASTER back. Mr. Rock Lobster, are you there, sir?
I'm trying to be, although okay. I'm remarkably quiet right now.
Well, we can hear you, sir. What is lighting up your tape as we endeavor to get the FLOWMASTER back?
I know. I liked Henry's sentiment there. There's a lot of people were calling for this bank failure. Of course, they always call for it somewhat after it's happened and never before, I believe. Or they just call for a bank failure all the time. Every day is a bank failure. I think real simply, as I was saying with Umbridge at the beginning of the show, for some reason, the Swiss government has to create a loan facility of $50 billion for a bank that has a $7 billion market cap. So I don't know about anybody else, but I think the world would be better if Credit Suisse just no longer ceased to exist.
How dare you, sir? How dare you allow Credit Suisse to go the way of the dodo?
They're like the dumb rich uncle that's just going to spend all his money, and then when he dies, he has nothing left. I'm just trying to wrap my head around this bank, and like every banking crisis, it seems they are at the front of it, just somehow, some way. And I mean, you could also blame, in a huge way, all of the G7 governments. I guess Russia was what? They were the 8th, or they make them G8. But having artificially low rates, having this ridiculous QE mentality for a decade, doing ridiculous stuff, driving interest rates to nothing, forcing banks to buy bonds that pay no interest that they never would have bought unless they were required to. There's so much stupid going on in the world of regulation, government spent. Like the Fed is raising rates, and we just put in another budget that blows the doors off of spending again. Like, I don't know if everybody's watching the same movie, I think, in Washington. I'm not sure. But besides that my little rant right there, as usual, once again, some banks just have a problem. Rates go up from 0 to 5%, and it's going to cause problems for someone holding securities that have to be marked to market. So most of those mortgage-backed securities and most of those bonds will be paid off at par, probably 99% of them, right? But if you got to mark them to the market every day, that means you have to hedge that interest rate risk somehow, or something like that. Because how can you have a portfolio that's big? And so whatever SVB did, who the heck knows exactly what goes on in some of these banks. But, if you have just a huge chunk of something and it's marked to the market every day and you're required to have it, I'm still trying to figure out how they have to claim that as a loss somehow. So, again, another difficult thing for me to wrap my head around, because I'm really just not an expert there. I find it all odd. So you have a couple of banks that got squeezed, basically, and now they came up with some sort of rescue plan for depositors, making depositors 100% whole. I'm not sure how that all works, because I don't think the government has that much money, to be quite honest, to make all depositors whole if they had to. So we're once again in this oddball situation of, what are they doing? Are they swapping mortgage-backed securities for cash as collateral so they could pay depositors? Again, I don't know all the details. It did appear, though, that once the Fed did that, and the FDIC and the Treasury, if you have something worth 85 cents and then you could give it to the government and they'll hold it for you, and they'll pay you the collateral on it, collateralize it to par value. That seems like some kind of, QE again, and some way to loan banks more money, or somebody to make more money for nothing.
We have mark to market unless it really counts. Then we don't.
It really counts. Yes. So I guess they've got. So all those things a net positive for stocks? So we don't have some total mess. Yes. Does it possibly cloak some issue, right? That we could have. Yeah. It actually. Yeah. It could cloak some bigger issues. Although, you would think that the Fed and all this stress testing with all these banks, right? Aren't they giving all these banks stress tests? Who gave SVB Bank a stress test? I don't, again, not clear on the use of regulation if it never works.
But Andrew, who could possibly foresee buying a bazillion 10 years would somehow not work well in a rising rate environment? Who could have foreseen such a thing, sir? You're asking for madness.
And I know, like I say, I am not a fixed income guy. But even I might have been able to see, like, well, we got a lot of interest rate risk here, or however the bank does what they do. So anyway,
they needed to take TOSAW's Row webinar, then they would have been much better off.
Yes, they would have been much better off. It would have been easy. So, and that's where we are. So obviously, I don't want everybody to lose all their savings and all that kind of stuff, because that'd be, then that's terrible. My guess is that, banks are probably okay. They are holding some securities that are underwater. Don't know how many. I think, the biggest recipient of that, I guess, is Fannie and Freddie, right? The government, now the government is holding all this stuff. We've had multiple times to try to get that off the government books, but Congress just can't get away from that free money that I think Fannie and Freddie keep throwing off to them. So there's a common theme in there. So, although right now, but here's what I will say. Vol came off of 30 twice this week, which is generally, that's kind of, that to me, it's the danger zone, but it also starts to break into like some sort of systemic problem when vol gets that high. Because then we're almost like 2% a day average move for 30 days, and everybody's starting to get a little nervous. And we're back down to, we're still in the danger zone 24 as the show goes on. So without monopolizing the whole show, I would say it looks better, but I don't know if it's over quite yet. So, and that's where we are. I think having another shoe drop would surprise nobody at all at this point.
What would surprise me, though, is if we have the FLOWMASTER back, because against my better judgment, I'm going to toss to him again. Mr. FLOWMASTER, are you there, sir?
I'm back. Can you hear me?
Yes. So here's the key. Don't get too excited. When you get too excited, that's when your system seems to kick you off.
It must be the compliance people.
Yes. So he's getting way too into this. He must be dropped right now.
But I agree with what Mike was saying, that the feeling like, yeah, maybe this kind of backstopping is necessary to stabilize things, but at a more basic level, it's concerning, is I think what a lot of us feel. And, this kind of, I don't know, I mean, when they start guaranteeing deposits for everybody, no matter how big, then isn't that just the same as the federal government being the bank? I mean, why don't we just open up accounts there? Like, the risk management that a bank is supposed to do is supposed to avoid, these duration problems, right? Everybody knows they loan out they make mortgage loans, which are 30 years with a prepay risk, and they give overnight interest. And there's a really big mismatch there, which banks have managed for hundreds of years. And, I don't understand, like, yeah, they raised rates. And so fixed income instruments prices dropped. Everybody knows that's what happened. That's why you hedge your row and options, and that's what the bank risk manager is supposed to be doing.
All right, and let's go last but not least out to the quiet hinterlands of Chicago, aka St. Charles, where we are joined once again by Mr. Uncle Mike TOSAW. Mr. Uncle Mike, sir, what is catching your eye in a very much Uncle Mike type of day?
Well, I decided on what my slogan's going to be if I'm ever the CEO of a bank.
We don't like mark to market.
If you can't hedge row, you gotta go.
Oh, there you go. You could imagine how many row webinars you could do as a CEO of a bank. It would be nonstop. Sir.
Well, yeah, based on the promise I made last week on the Pro Show, we'll definitely be getting. I'm working on my row webinar as we speak, and who knew it was going to be this timely at the time that we had talked about.
Couldn't be a better time in history for a row webinar, sir.
I would agree with that. All right. So anyway, in terms of what I'm seeing today, of course, that now that we're bailing out a bank, markets are higher again, and everybody's stable, and everyone's breathing a sigh of relief. But just understand, we still do have a 24 VIX. This still is. This can be a pretty scary market, and we are getting lots of movement during this time. We are ahead on the week. But keep in mind, we are still below the 4,000 mark on the S&P 500, and we're still roughly 20% off of our all-time highs that were made about 13, 14 months ago. And so on here, I am the eternal bull, the eternal optimist, if you will. And But what's happening in the near term is that we are getting a lot of volatility, and rightfully so. When you have announcements and fear of banks going belly up, then a lot of us that are in this were around in 2008, and we remember what happened and how it seemed like, oh, it's no big deal at first, but it became kind of a big deal in 2008. And so that is one area of fear that the market is still very much addressing. Plus, we have a conflict in Russia or in Ukraine that no one wants to talk about anymore. We are still recovering from what it looks like from the global pandemic. And there's stuff going on. And what shows the resiliency of this market is that with everything that we have going on, the things I mentioned, and we're raising interest rates at the most fast level in the history of the Federal Reserve, we're still only 20% off of all-time highs. And so I think that's a very big sign of resiliency in the stock market right now. Now, I could be wrong. We could drop 80% tomorrow. You never know, but we are doing that. Now, the one sector that I am seeing that I think is kind of sticking out just kind of like a sore thumb lately would be that of energy. And that energy is definitely lagging the rest of the marketplace at this point in time. And so something to keep an eye on with that. It'll be interesting to see where we are when the Fed has their next rate meeting and how that affects energy prices and how that'll work going forward. So I would say keep an eye on energy. I could see a pretty large move coming in it in the near future. In terms of which way to go with it, that part we'll have to wait and see on. So that's what I'm seeing today in the markets.
All right, let's see what we're seeing out there in the markets. Let's start in the broad indexes and work our way down. We'll actually start in vol land as we are wont to do out in VIX. VIX taking another leg up in terms of volume since even our last show on Monday. Obviously, a pretty action-packed week. A lot of numbers going up. Some million handles flying fast and furious. VIX today already north of 500,000 contracts, 569,000 contracts. As of a few minutes ago, the ADV also surging north as well, 829,000 contracts on the tape out there. So a good volume day out here for VIX. SPY, same deal. A day like today, SPY tends to like it. Little over 7 million contracts on the tape right now. The ADV also soaring out there up to nearly 9.5 million. So SPY closing in on another impressive day. The S, already 2 million contracts, 2.02 million to be precise. The ADV out there, nearly 3 million now, 2.85 million. I think we saw a record day on Friday out there. Maybe the FLOWMASTER can back me up on that, but I'm pretty sure Friday a record day for SPX. So closing in on 3 million from an ADV perspective out there in S-land. So nothing to sneeze at out there. Small caps, IWM also blown the doors off from a volume perspective. 901,000 contracts on the tape. The ADV hanging out right around 950,000. And let us not forget the Qs because they are on the march again today. 2.76 million contracts on the tape. The ADV about exactly 3 million. So the Qs already doing almost a day's worth of paper. Same thing with small caps and S and SPY not that far away. Let's go on out to the single names. Sometimes a day like today, it's all macro. Single names is kind of the land that time forgot, but not today. Listeners, number 10, take a guess. What could possibly be at our number 10 spot, listeners, with 420,000 contracts? Oh, did you say Credit Suisse by any chance? Was that your guess? Because if that was your guess, listeners, you are correct. Credit Suisse trading 2.25 right now, up about a dime. So apparently the worst is over, at least for right now. We have backstop Credit Suisse. It's not pulling a Bed Bath & Beyond. It's not rallying to $5 or anything like that, but it has rallied off the lows. I think it got down to about 175 yesterday. That was the low we saw out there. So apparently the worst is not over for Credit Suisse. But again, good for 420,000 contracts on the tape out there today. Let's move on to number 9. This one has been a perennial top 10er ever since they announced their earnings and also since they announced they were in on the AI game. This is Alphabet, aka Google, hanging out a little bit north of 100 right now, about 100.60 listeners. That's good for 488,000 contracts, up about $4.50 today. So a nice little pop there for good old Alphabet. We used to joke not too long ago, man, if Alphabet's in the top 10 most actives, then it's a quiet day. but it does seem like the AI war has certainly changed that out there. Number 8, staying with our contagion fears. We're going to Bank of America. This is another top 10 one now. And quite frankly, when I hear a lot of people in the industry pushing back on me now saying, oh, we couldn't possibly handle single day, single name equity options all going off. Imagine the chaos. Just look back to last Friday. Bank of America did over 1 million contracts, a good chunk of that expiring that same day, and the sky did not fall and the markets did not implode. So clearly it can be done when push comes to shove. So intriguing stuff out there. Bank of America today, $29.30, up about 80 cents or nearly 3% on the day today. Good for 489,000 contracts. Number 7, good old Softy. Good for 533,000 contracts. Softy, man, on the rampage today, up a little over 9 handles. 27.5 is where it's hanging out right now, up about 3.5%. Then we've got number 6. There's a lot of the usual suspects out there today, listeners, including Meta. Apparently, Meta decided that, they did pretty well the last time they announced they're cutting jobs. Let's cut some more jobs. Why not? Good for 539,000 contracts. The stock popping $2.50. It's over the 200 handle again, listeners. 200 and about a third out there right now. So it doesn't seem like that long ago. I think it was November of last year. We were joking about someone getting run over on the 200 calls in the wrong direction. Well, if they held on, they're doing all right. In fact, if you listen to our Options Oddity show, the Rock Lobster and I did break down the saga of that person. They were back and they were rolling after they got run over on the 200 strike. They rolled down. They got run over a little bit again, but then eventually they kept rolling and they now have done all right again. So an interesting saga out there. Check out the optionsinsider.com/pro if you want more insight into all of that fun and everything else, all the other bad business we get up to on Options Oddities every Friday. And then number 5, man, when's the last time we've seen Apple all the way down at number 5? But that's where it is today, listeners. Apple, 757,000 contracts. 155 even is where it's trading, up about $2. So interesting day for Apple. Decent underlying day. Actually not a terrible options day either. And yet just can't seem to catch a break in terms of our top 10 today, because number 4, AMD kicking it to the curb. AMD saying, hold my bear, kid. Chip zone time. 778,000 contracts coming in at number 4. AMD up 6.25 handles, nearly 7%, trading a little bit shy of $96 right now. And then we've got number 3, man, chip zone representing hard here in the top half of the top 10 today. NVIDIA coming in at number 3 with 824,000 contracts. NVIDIA up nearly 10 handles as well, 991, a little over 4%, trading 252.20 right now. A nice pop here for NVIDIA. Then the top 2 are more of our usual suspects. Number 2, we have the Amazonians hanging out at 862,000 contracts. So pretty much everyone conspiring to kick Apple to the curb out there today. 862,000 contracts. Amazon trading a little bit north of 100, about 103rd, up a little over $4 or about 4.3%. And then number 1, the big dog, day that ends in Y. That means it has to be Tesla, listeners. Tesla, 1.41 million contracts on the tape. Tesla trading 185 even right now, up about $4.50 or about 2.5%. In terms of earnings season, we are kind of in the dregs for it right now. We had our old friend Stone Cold, a.k.a. Stone Cold, popping off on Tuesday. Leonard Holmes and Guess as well on Tuesday. Wednesday, some name called Oatly. I've never heard of it. Maybe the Rock Lobster's heard of it. I don't know. I'm not familiar with it at all. This Swedish oat milk product. Oh, what, did I say that out loud? How can I be familiar with this thing? I don't know. Check out Options Oddities if you want more, listeners. Adobe, Five Below as well. Thursday, Dollar General, Blue Apron, and FedEx. You can check out all those reports for yourselves, listeners. TheOptionsInsider.com is the place to go. Click on the Options News and Articles tab to begin your journey to the dark side. Right now, the season hanging out at 103%, actually ticked up. It was at 102 not too long ago. Now it's at 103, still well above our long-term average of 92%. As we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. We attempt to figure out what our Eye of Sauron has fixed its gaze upon today. We have a few that it has kicked out for us, but because it is Thursday, we are joined once again by the FLOWMASTER. Let's start out there in FLOWMASTER land. Mr. FLOWMASTER, sir, what is lighting up your tape out there as you monitor all the flow? By the way, I've been enjoying your daily, I don't know what you call them, the best options trade emails, but those have been fun reading in the morning, sir.
I added you on to, I think I called a query the trade of the day, which is
yes.
P&L run for every opening sweep, and then we just sort it by the profit. And it's funny you mentioned those meta 200 strike calls. That was definitely the top of the list one of the days. And top of the list tends to be kind of in the $600,000 to $800,000 P&L on a couple $100,000 in premium, like those 200-300% returns. So that's the time where I stop and actually look at the report and say, holy cow. And then I kind of back up and start going to look at the trades to figure out if there's something I should have been able to see. So I think kind of watching the trades, running P&L on them, even when they're not your trades, is a really interesting way to kind of look at what traders are doing, but also kind of maybe to sniff out some strategies that you don't necessarily do, and think about putting them to work. There was one trade today that I thought was kind of neat, which was a risk reversal in KB Home. So, and I see it's on the earnings list for next week, not KBH, but Lennar is. So this was a defensive collar. And so, why I said that I like these shakeups, because all sorts of opportunities open up is, you guys know this, right? Because we used to be market makers. You're looking for the panic. You're looking for the people crying uncle and just doing a trade without, because they have to or because they're just not in a very good frame of mind. And so this KBH collar was the April, stocks around $34. And it was April 32 put, 38 call, and they bought put and sold call 10,000 times. So you're talking about a 1 million share notional on a name that's really not that active. I think the average daily option volume is only 3,400 contracts. So and the average daily spot volume is only 1.3 million shares a day. So it's a kind of a thin name to begin with. And to see it collar, and it was double opening, we could tell that because it exceeded the open interest, was an interesting defensive move. And when you have kind of these banks and everybody starting to get very, very nervous, and this was this morning when we were down, not now when we're up 2% or 1%, felt to me like a little bit of a panic kind of hedge. So that was one that jumped out at me for sure.
Yeah, that is an interesting one. I'm looking at it right now, actually, and looks like they actually paid 6 cents for it. So a little bit of an outlay. Usually they try to get these things for zero cost. And you see how they did the puts for about $1 and the calls for 94 cents. Yeah, not playing around 10,000 times. And it looks like here on the year, a year ago they were trading not that far from where they are right now, about $37. They got down to, looks like the nadir. They flirted with it a few times in June and then again in October of around $27, actually $26 and change out there before getting back up to recently. Their high for the year was just a little bit shy of 40, listeners, about 39 and change out there. So they haven't moved a ton over the past year, but apparently enough for someone to want to put on this collar, Mr. FLOWMASTER.
Absolutely. And then a couple other ones I guess I was looking at, and I think your listeners know if they set up a trial of Trade Alert through CBOE and ask for us to set them to match the Options Insider settings, they'll have the button. It's not called Eye of Sauron on our setting on our machine, but it is called the Odds Box. So. One of the other ones I saw today was in NLY, which is, I think, Annaly. Just a little one, but an opening 13-cent call buyer.
I was just going to say, I'm guessing they're buying puts. Someone actually bought calls on this one. Wow, yeah. We've been talking about this one forever, and everyone's just buying puts like clockwork in this name. Wow.
I mean, this one, it's a $19 Annaly Capital Management. I'm not sure what sort of what space they're in exactly, but it's capital management. And I think we're up to about 40,000 of the April 21 calls bought in the 10, 11, 12 cent range, opening on an $18 stock. So, in that case, I'll look at, when are earnings and try to figure out, earnings aren't until April 26th. So these calls don't even last. This seems to be probably somebody looking for kind of a rebound, in the space, and the stock was at over $20 last week. And so, that's, when you see this kind of just wholesale puking of financials and a kind of a flight of quality into kind of, out of the regional banks and into names like, B of A and JP Morgan and stuff, people sell everything because they have to. And so that's where you can kind of try to, the kind of the savvier people set back, they're familiar with the company, or they do their homework, and then they pick the names they like and they take advantage of these sell-offs.
Yeah, this Annaly, we've been talking about it on our Options Oddity show and on this show, this segment, I believe, as well, quite a bit. This is up there with Agency and a few others of these REITs that just have been getting faded for the better part of Annaly. In the case of Annaly, over a year. We talked about it not too long ago on Options Oddities, and we have paper in that one going back to, I believe it was October and November of 2021. So people just loading up on puts even back then. So this is part of that family of REITs that everyone has been. We talked about it last time you were on the show, Henry, about you looked at the 13 Fs for, I think it was Ares or a couple others out there. But there are so many. Agencies, another one. These are all kind of get lumped together in that same basket of REITs everyone apparently loves to fade. Until today, Mr. Rock Lobster, I was kind of surprised to hear Henry talking about calls in this name. I didn't think they traded calls in Annaly. What are your thoughts on this one, sir?
Of course, I don't get the latest update from you guys. So I'm assuming somebody bought some calls in Annaly right now. Is that what you're trying to tell me? In Nelly?
Hey, you're hearing it on the fly. You're hearing it on the fly, just like me. I'm rolling with the punches. That's what we do here.
So Henry bought anyway. So they bought some upside calls, and that happened today because I'm just looking.
They bought 30,000 of the April 21s for a dime, and then 15,000 more for 11 cents.
Really?
Yes.
Oh my word! They certainly did. I'm going to almost say never in the history of Options Oddities or the Odd Block have we seen this.
I don't think we've ever talked about call paper in a REIT.
Well, what's funny? So I used to trade this name in the 90s up until like for a long time. And it was kind of always a fun trader because okay, they're going to pay this big dividend. And I guess all their money goes out in a dividend. The company's been around for 30 years, right? So you would assume that after 30 years, they would have figured out this whole interest rate game thing, right?
They need to take TOSAW's Row webinar too. Everybody needs to line up for that webinar.
Right. Well, that's the point. But they've kicked their dividend up in 2022. I mean, that's on the back of a rate rise. So they must have kind of been, thinking this was going to happen, this rate thing going up. Because they went from a 20, so they're paying. Last year, they paid almost $2 in dividends. Right now, they're starting at a 65-cent dividend per quarter. That's so a huge yield, right? So these things don't make, a lot of money. They're not really a capital gain type thing, but it's a dividend. So now all of a sudden, their dividends, clearly they're still paying them, right? They know what's going on. So the only thing I could think of is, all right, so do they have somehow is their portfolio going to break apart? Anyway, I'm just saying that I traded this name off and on for 25 years, and it's still here. It doesn't go away. So I can understand that. I can see why people would want to buy puts in this thing because of the potential of, a meltdown in the mortgage-backed securities market or whatever, but, it's still around. Now, the second part is this huge put trade and that the FLOWMASTER gave us as well. So did they go all in with the, I'll sell some puts? I wasn't sure about the put side, he said. The call side, I get, but was he saying that they sold the puts for 30 cents? Because it looks like they might have just sold the puts to buy the calls.
Talking about the collar?
Yeah.
Yeah, that was the caller. That was earlier. You're like one removed.
I'm always a tick off. Okay. All right. So anyway, but yeah, I can't remember anybody because why would you buy upside calls in this? Because the stock never goes up. They just pay this huge dividend and it just crushes the calls every week. Like every month. Oh, the stock's up a little. Dividend gets paid, stock back down again. So I don't know why anybody would spend any money for a call ever in this name. But hey, I'm here to learn. Maybe somebody knows something.
Just choking on like 50,000 puts out there. Apparently, he decided why not leg into the strangle for another dime, right? Why not? Go big or go home. That's what he's doing.
It's quite entertaining to me.
Speaking of entertaining, Mr. Flowmaster's paper is always entertaining. Mr. Flowmaster, anything else up your sleeve, or should we dive into some of the ones here?
No, we can dive into some of the other ones that you.
All right, I don't know if I can match the shock value of your calls there at Annaly, but let's try it nonetheless. Let's go out to Mattel. Let's talk a little bit of toy volatility. How does that sound? Mattel trading right now $16.58. Bit of an interesting day out there, up about 60 cents or about 3.6%. On the year, though, not quite as good of a story. Off nearly 7 handles or about 30%. So toy vol apparently looking a little bit rough out there right now. Obviously, input prices, inflation, lots of things weighing on the toy market right now. Mattel a year ago was trading a little bit shy of $25, about 23.5. They rallied all the way to the 52-week high of about 27. Looks like they hit that in March. And then that was kind of all she wrote for the year. They bottomed out, though, at about 15 1/3. Looks like they hit that a couple of times or close to that level. In December, they flirted with it, and then they got back down there again, flirting with it again right now. So kind of flirting with that 52-week low, even though they have rallied it at that 16.60, so about a little over $1, about $1.30 off of their low right now. And it seems like someone thinks this toy love can continue, because someone coming in this morning and scooping a couple of thousand, 2,000 to be precise, of the April 16s. They paid 79 cents, so right off the offer. This is a 39 vol. There are no earnings in this cycle, listeners. The earnings are in April, but they're after expiration. And I guess they liked it so much they came back and did almost 2,000 more. So a total of about 4,000 of these April 16s going up second kind for about 80 cents. So they did lift the offer there. Mr. Flowmaster, have you seen these? And what are your thoughts on someone swinging for a little bit of upside love here in Mattel? Actually, these are now in the money calls, so they had some good timing on these.
Yeah, I was. It looks like they had some news hit around 10:20, because I'm looking at the chart and the thing went from 15.90 down to 15.40, and then all the way up to 16.40. And the Fly.com has some sales stats that came out. They reiterated guidance, I guess, but it looks to me like they scooped these up when the stock was at 15.93. So it might have been somebody who was waiting for a buying opportunity. It's funny, Mattel is the first. I do a daily, or every few days I do a note on Fidelity.com strategy idea, and Mattel was the very, very first one that I put on there about a year ago. And of course, it was probably a short put, and the stock just kind of went down for about a year. So, but we keep selling calls against it basically. So I don't know. Like I said, I think that when you get a shakeup, then people that have strong convictions on certain names take advantage of that. Because remember, we get all when the market's at all-time highs, everybody's like, I don't know, I guess I didn't buy it when I should have bought it. Well, this to many people, this is your buying opportunity.
There you go. Getting a little bit of a toy vol in the old portfolio. Mr. Rock Lobster, did you notice these? Any thoughts here on someone swinging for the upside in Mattel?
I did not notice Mattel, but you know me, I get a lot of ideas from this show just because I put the names on my list. I wasn't Mattel like a $60 stock at one point or something like that? Not in the past year, but I know they have been higher. If I go back a little farther, let's see how high up do they get? Yeah, they got up to a little. It's like around $50. Well, I somewhere in my head I felt like this, or maybe that's Hasbro or something like that. But
it could be Hasbro, yeah.
Yeah, in Mattel, don't they have like Barbie and?
They have Barbie. They have He-Man, Uncle Mike's favorite. So all the good stuff.
They got a lot of good stuff. They haven't paid a dividend in a long time. Maybe that was part of the problem. I just remember. But yes, you would think I'm kind of a dumpster diver when it comes to like, S&P 500 stocks. Like, I find that's the easiest, the easiest way. Although when they're going straight down, it makes it a little harder. But I don't think this is a terrible purchase. I mean, at least right now, if they actually paid 79 cents for these, I mean, they're just like pennies over parity at this point. So I think they're looking pretty good on these calls. Like this is the first. Isn't this our first test?
Yes.
Yeah.
Yes.
So I kind of view Mattel like the Gap, right? Where it's like a franchise that's really not. I don't think they have Old Navy, and they get the stupid CEO and they do stupid stuff, and then you get like the smart CEO and they do smart stuff. And I kind of feel like Mattel is probably, maybe they're suffering from some of the wokeitis or all these other things that some businesses suffer from. But you look at it and you're like, well, it's kind of, it's kind of cheap, as a company considering what they sell and all that, everything. So I don't think it is a bad purchase. Clearly, this purchase was excellent because they've already doubled their money in about 20 seconds, which is what you get when VIX is 24 and the market is bouncing. Like, whoa, you blink and like, wow, everything's up. Like
I think you're talking yourself into a call purchase here is what I hear.
I am. So. I think I would probably go the FLOWMASTER route though and say, all right, because I tend to be, well, here's another thing. You can't even sell the 15 puts for $1. So that is not the most compelling sale for me personally. But yeah, I think at a 37 vol, the 16 calls are $2 and there's 62 cents in the money. So I think yes, you would rather go the call purchasing route than the put selling route on this one.
There we go. A winner. I would not be surprised if tomorrow on Options Oddities I hear you tell me you have some Mattel in the old back pocket for a rainy day. We shall see. Speaking of seeing, listeners, let's see what you folks have on the brain. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. We have our questions of the week. We'll get to those in a second. But first, I promised you last week, Mr. FLOWMASTER. I promised Men's, too. He sent this question in a couple of weeks ago. He's been waiting patiently for your response. So we'll start with Mr. Men's first. He just wants to know, can you ask the FLOWMASTER, what are the most popular searches or scans at Trade Alert? I mentioned the Eye of Sauron, TM, that's a good one. But what else do you have lurking over there that people may be using a lot that people want to know about?
So we have a couple simple commands for just unusual volume because the Trade Alert system fires out alerts on unusual volume, but it also lets you recap unusual volume. And we have one which is just unusual total volume. So like NLE might show up on there. But we also have one that is specifically ordered by unusual call volume that's offer side and unusual put volume that's offer side called bullish or bearish. So these directional unusual volume situations, people love them. And, the combination of the alerts, which kind of put it on your radar screen, and then the ability to dig into it quickly is definitely very popular. The other one people really like is we have an earnings gap function, which basically just lets you really quickly see what the expected move is versus the historical, but you can actually do it on a larger group. So like I can see, coming up in, a couple of these thin low price names like GoEv and Carnival and GME, we've got like double digit moves predicted. And so it just, again, it's just a quick way to say, okay, yeah, straddle trading around 21%, which is twice the historic average. There's usually a reason for it, which I know that when you guys talk about earnings trades, it's kind of it's an interesting sport. But just getting that information across nice and clear is also a big popular one. And then, the odd block button is in our top 20 commands. Probably it's always probably you, but still it's in our top 20.
People like it out there. They like a little bit of the old odd block goodness. Yeah, listeners, if you try the old free trial, then you too can play with the Eye of Sauron. Put all that power in your hand. Just be responsible. Remember, with great power comes great responsibility. All right, Uncle Mike, we were joking earlier about your row webinar, given all these banks out there, but now we have another one. Maybe this question, we've gotten a few along these lines, and maybe this question also emblematic of where we are from an economic perspective right now, because we have Jeff Davis. His name sounds familiar. I think he's written in before. He wants to know, what would happen if you were long puts on Silicon Valley Bank right before they went from 267 to 0 and vanished? He says, theoretically, you should have made a fortune, but puts are the right, not the obligation, to sell the underlying at a given price. Now there's nothing to sell. In other words, how are puts exercised or closed when the underlying has disappeared? Thanks, Jeff. Well, short answer, Jeff, is you should be pretty freaking happy. But long answer, Mr. TOSAW, people sometimes conflate this. They think, oh, the stock's gone, I'm out, my puts are out. Set him straight, sir. Why should he be happy with a big smile on his face in this scenario?
Well, if on the puts, obviously you want the market to go down. But think of it this way, in terms of how things are handled, how bankruptcies are handled, and how delistings are handled, I'll leave that to someone that's above my pay grade. But understand that if I own a put on a stock that's no longer traded, I still have the right to sell it. Even though there's no one to sell it to, or there's no one that's going to want to buy it, it's still my right to sell it, and someone else has the obligation to buy it, whether it's a stock or not. I still have that right. So in terms of the logistics of how it works, I don't have all the answers to that one, but rights are rights.
Yes, you are buying that right. That is a key point. You mentioned in your question there, Jeff, that you're buying the right. Now that's gone away. No, you bought that right. That right is in your back pocket. You can still sell that stock, which is why puts are expensive. But in scenarios like this, they are worthwhile. Mr. FLOWMASTER, anything you want to add in on the mechanics of what happens behind the scenes, sir?
Well, yeah, I would add in something really important, which is I would actually say call your broker if you have any puts on any of these names that have halted, because I believe, and you need to do the homework on this, I believe OCC suspended automatic exercise on these, but obviously you don't want to fail to exercise a put that's $50 deep in the money. And so I think the way it works is you're allowed to exercise it. You effectively get an IOU saying that you're short the stock once it becomes available. You don't pay a borrow on that IOU, which is actually a big plus compared to just being short the stock. But you need to make sure that your broker is in the loop. And in a lot of cases, you have to give them a manual exercise and say, hey, I need to exercise these. And with expiration tomorrow for a bunch of these, this is very timely. So, and actually one thing I was doing in our terminal was looking at the open interest in some of these names that are halted. And you can see that the put open interest is decreasing, meaning people are exercising their puts early, because why wait till tomorrow if you're in case you make a mistake or your broker screws it up. It's actually better to start it now, and if the stock's not going to reopen, then there's not really any reason to wait. So the takeaway on this for exercising puts, if you own puts on a halted name, is call the broker, tell them that that you're going to be exercising them, make sure that they know how it works, because this is kind of this is abnormal, right? It's happened. We had it happen with that Russia ETF at the beginning of the Ukraine war, and it's still halted, by the way. So talk to your broker and make sure they understand the whole process and that it's crystal clear, because there is still some huge open interest at the 200 strike in these names that are effectively worth zero.
Yeah, it might require a little bit more effort on your part. You can't just get the auto exercise like the FLOWMASTER was saying, but hey, $50 in the money put, more than that, it's worth a call to your broker. So yes, short answer, Jeff, is you're in a good spot. Longer answer is it may take a little bit more effort on your part, but I don't think you'll mind given the results. Speaking of the results, right now I happen to pull it up, our question of the week, hanging exactly at 50-50, listeners. It just shows how the news of the week has ebbed and flowed this and just impacted this poll. Of course, our question right now is, everyone has contagion risk on the brain this week after the meltdowns of, the names. I won't list them all here for you. So we thought we'd put the question to you. Is this just a canary in the coal mine of worse systemic problems ahead? Or is it just a tempest in a teapot? Earlier on in the week, everyone and their mother was in on Tempest. It was over 70%. Right now, hanging exactly at 50-50. So a lot of people coming in and voting on the worst is yet to come. As we keep on going into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everyone, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. Mr. Uncle Mike, sir, we will start with you. What is on your radar as we head into a very maybe nail-biting weekend, and what are you looking forward to or maybe preparing for our next episode on Monday, sir?
Anything on the news, I guess. Normally, I don't really like watching the news on stuff, but you kind of have to right now if you have skin in this market. So just watching for any news events, of course, to see where we're at. And then possibly tomorrow, maybe today, you never know, seeing if maybe we can make another run at 4,000 on the S&P, or we're going to see if this was just a little bit of a relief rally for today and might go back down tomorrow. So I think 4,000 is a key number on the SPX, and seeing if we can make a run at it.
So Uncle Mike watching all news. I just have an image of you sitting in front of like 20 monitors, your eyes glued open, just watching all news coming in at all times, Uncle Mike.
That's what I do. Not really.
That's pretty much what you do. Mr. Rock Lobster, when you're not watching all news, what are you keeping an eye on for the rest of this week? And what are you watching until our episode on Monday?
Well, I'm going to, again, if we can get to the lows of volatility we saw on Tuesday. So that would be VIX around 22 something. And then I think, okay, contagion, no contagion. Is it going to spread? Is it not going to spread? At least I think my sense is, since rates have been going up for a year now, and this is the first we've heard of a smaller bank blowing out. It is possible all this stress testing and all this kind of junk has helped. That's possible. And I could always be hopeful, but that's not my way. And then also we have, the FOMC, obviously that will come after Monday's, our show on Monday. So at least for this week, do we any more bad news coming out? And I would just say to Henry's point, if people go to the Options Clearing Corp website, they actually are on their game. They normally are, and they have instructions for exercising puts early, which they're saying is basically going to be a broker-to-broker settlement. So basically, it looks like you exercise your put, and some poor sucker is going to get stuck with it at $350 or whatever the stock was. So those exact bulletins are on their website, so you could look at them and see what's going on. So generally, they do have to have some kind. They generally, as I recall, in the old days, used to have a closing rotation and get a price, some kind of settlement price on the floor. And now it's been 10 years, so I don't know if they still do a closing rotation. But it is clear that the OCC they have thought about this because it's happened before. And the notes are on their website if you're interested to learn more about it. So there you go. I did a little extra work for the listeners.
Look at you doing homework. Look at you doing homework for the Yes, OCC, that's always our first and last place we recommend you guys go because they are the keepers of the contracts at the end of the day. So they will have the specifics on how all this fun works. Mr. FLOWMASTER, we're coming up against it. So what are you keeping an eye on for the rest of this week? And then where should folks go if they want to kick the tires and light the fires on all these cool scans you were just talking about?
Well, we have a quarterly expiration. Some people call it triple witching, which is tomorrow. So I've been doing some aggregate analysis of the size because when these things roll around and then I start to see posts, some of them are a little misinformed. It's a relatively big expiration tomorrow. It's over 100 million contracts of open interest, which is bigger than the last three expirations of the quarterlies we've hit, but it's well below last summer, last June. So big expiration, but I don't actually see any big concentrated positions. And anybody that's listening is welcome to request a free trial. There's so much talk about zero DTE and in the trade alert system specifically, there's some proprietary CBOE data which shows you the customer buying and selling and lets you look at a position that is seeing heavy 0-day trading and say, well, I see 100,000 contracts traded, but I can tell that there's only, a net of 3,000 or 4,000 open contracts, even though there's no open interest on these 0-day options, right? Because OCC never gets to clear them. You can estimate it using it's called the CBOE open close data. And that's a big plus. And, I think I think the Traderless system has a really handy way of presenting it. So just shoot us an email, traderlesssupport@cbo.com. We'll get to us, and tell us you heard about it on the Options Insider, and we'll be very nice to you.
They will be quite nice to you. Mr. Rock Lobster, he's not that nice. People who work with him are quite nice. So Mr. Rock Lobster, where should they go if they want to learn more about what you got cooking, sir?
Well, you can go to two places now. You can go to optionpit.com, ask for Ted or Andrew. Or you could go to Money Map Press and ask for my weekly profit cycle trade, how to trade VIX and SPY at the same time. So that trade, that product has moved over. It is doing first day we launched it. First trade doing okay. It's green on the screen, which everybody likes. So either place, if you want more hands-on, Option Pit is still the place to go. And again, call Ted and you get 10% off at Option Pit if you say you heard this show. And I'm always interested to see the new goodies Henry has coming out. I feel like he's the mad scientist with the data now. He's going to be the mad scientist FLOWMASTER, something like that.
He's got those good goodies up his sleeve all the time over there. And speaking of goodies, Mr. Uncle Mike, last but not least, sir, where should folks go if they want to check out your goodies online?
Follow me on Twitter at Mike TOSAW, TOSAW. Just put out another article for the month on safety of banks. I figure that might be a timely topic because I think there's something like that going on. And stay posted to it because by the end of the month, I will have a video released on Roe by popular demand at Mike TOSAW, TOSAW.
There he is. At Mike TOSAW is the place to go on Twitter. We got to get on out of here, listeners. But if you're in the mood for more, if you're listening live, one of our pro members, stay tuned. We'll be back in a little bit. I'll still be down here in Florida, beaming up from Florida for this week in futures options. Then I'll be back again in the studio tomorrow, listeners, in Chicago for volatility views at noon, and then options oddities after that for all of our pro folks. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.